This is our Forex blog for January 7th, 2011. I'm going to go through all the currencies. Euro dollar absolutely exploded yesterday. When it's underneath the lower containment band, it typically tends to reverse. Plus, this one has been down 4 days in a row. So if you wanted to look to buy this today at the lower containment bands, especially if it didn't have that much weakness, that makes a good trade. Usually when price is trending one way and the first time it touches the hourly moving average is a decent trade. But you can really see a lot of choppiness here. When it's going up and not able to get above the previous day's high, you can look for shorts. You can also look for buys down here near the lows because it has been down 4+ days in a row. Pound dollar, the daily, weekly, monthly trends down, so your main focus is looking for shorts. You sell right here, right before midnight. You can see the market pulls back about 30 pips. Again, the first time it comes back up to the hourly, great place to sell. And you can see that the momentum on the way up is more than any of the tiny down moves, and it's really just not falling. So anytime you see a multi-hour, this is a perfect flat top wedge pattern breakout, and you would have got long here, and it looks like you would have got stopped out here. And if you had flipped and went short because the weekly, monthly trend was down, it did go down enough to make 5 or 10 or 15 pips on that trade, and then it exploded up. Anytime things happen like that during news, you probably wouldn't have got into this. Realistically speaking, you might have been able to catch 54.75 or 80, and most of us probably would have got out of at least half here at the fib level, and then it went up a little bit more. This is a perfect example of our trend explosion system in action. Anytime you see plus 20 strength, and especially fib levels that get broken, resistance becomes support, and this is a really high probability, probably 70% probability trade, 65% maybe because the weekly, monthly trend's down. But usually after extreme strength like this, you're going to have one more move up, and you can usually draw your fibs on that last wave, and fib targets are great places to get out. You might have got out of half your trade here for about 60 pips. Dollar Swiss, the weekly trend is up, the monthly trend's kind of mixed. You might have looked to buy here last night. It went up 10 pips, more than enough to move your stop to break even. Then it broke underneath the hourly and came back up. Usually currencies that are in sideways choppy ranges, you want to wait for the high to get broken out before you go long, or the low to get broken before you go short. So you might have went short here. Because the weekly trend's up, you're not expecting that much profit. So on the way down, you might draw your fib and really consider getting out right here with maybe a 20 pip profit. Once it goes back above the hourly, it's a pretty high probability trade because it didn't even have enough weakness to go to the lower containment band. Fib level is a great place to take a profit. That could have been a 30 pip trade here, and it went up to that level with almost no strength. So if the weekly trend was down, this would have been a wonderful place to sell it. Here's one where the weekly and monthly trend is down. We have two narrow range patterns in a row. We're above the hourly, so this narrow range breakout system has you long here, and the market's really not going up with that much momentum. I probably would have got out of this trade right here at the previous day's high because there was absolutely no momentum. It did continue on up a little bit more, hit the fib level to the pip that I projected last night. Because the weekly and monthly trend's down, and because it went up with almost no strength, and when it hit that fib level, it had half the mediocre strength it had before. Great place to go short. If you're a more conservative trader, wait for this low here to get broken, and you can see it just absolutely collapsed. Trading in the direction of the weekly and monthly trend occasionally is going to catch you some absolutely huge wins like this. You're not going to get them every day, but if you trade a couple times a week, you're going to catch a trade like this every week, most weeks. And you can see it fell about 80 pips. Just absolutely collapsed. Now this was your first profit target. When that got broken, this was your next. It just shot through all of it and went to this level here underneath the lower containment band. I probably would have got out of my entire trade here. And even though it has minus 20 weakness, when it's underneath the lower containment band, it's a pretty risky trade. I usually almost never trade underneath there. Here's a good example of the fib action. The narrow range breakout here, normally you want to sell here, but you don't want to sell right in front of a support area, especially a fib level. And you can see why. It went down a few pips and then shot right back up. anytime you get a double bottom at a fib level or any other major support, it's a pretty high probability trade, but it's even higher probability once it breaks above this swing high, the high of the day, and this narrow range 4-hour high. It's also above the hourly, which is totally in our rules. And because the weekly monthly trend's down, you're looking for any sign of this to stall on the way up. This was your profit target up here in the fibs. Great place to get out. And because the weekly trend is down, when it double tops here with divergence, this is our double top with divergence system, perfect example of that trade. Great place to short here. You wouldn't want to short the first time, and you might have even bought this little dip here, which didn't pan out. You might have made 5 or 10 pips on that, flipped and went short, and caught 30 pips on the way down. New Zealand dollar, the weekly trend's down, the monthly trend's up. I primarily focus on the weekly, so when it went sideways and broke down underneath this range, I would have expected it to go down to here, and it didn't, so we probably would have lost 5 pips. I would have probably also gone long, short here as well when it broke the low, and it went right to the previous day's low and didn't break it. So you get out of that trade with a few pip profit, and you can't buy when the market's underneath this fib level because it's likely to be a major sell area, like you can see. But when it breaks out right here and breaks the narrow range 7 inside bars high, you have this profit target 20 pips up. If you're going to risk 5 or 10 pips with a good chance, probably 60, 70, 80% chance of making 20 pips, it's worth taking. And as you can see, sometimes you take trades with an estimation of 20 pips profit target, but it moves 10, 20, 25 pips more, right up to the next fib level. And because the weekly trend's down, you wouldn't have wanted to short up here the first time because it's too strong. But when it pulls back, this is a 1, 2, 3 high reversal. You can see almost no strength the second time on the way up. Stops at the fib. Great place to go short. And this was your first profit target. It shot right through there. You would have got out right here as it went sideways. And if it wasn't Friday, because of this weakness, if it broke down from here, you'd want to sell it as well. This currency is extremely choppy. You don't want to buy breakouts of narrow range patterns when they're underneath the hourly. You want to sell breakdowns underneath the low. You don't want to buy the breakout to the high. So this one just went totally sideways, right at the 10-day moving average, the weekly pivot level, and the weekly and monthly trend is down. So you preferably want to sell it. I might have went short right here when it broke the hourly after spending many hours right here, and more than likely I would have been stopped out. Had to go short again when it broke the low here, and it went right to the fib level. It had extreme weakness, and because all the time frame trends are down, if you wanted to hold on to moves like that, whenever the weekly monthly trend's down, give it a shot. Hold on to the fib level here. If not, you want to get out of the trade here because of this extreme weakness and it's not underneath the lower containment band. You might have sold here, and that made a little bit of profit, came back up again. Notice on the down moves, there are more weak than not moves. And the weekly and monthly trends down, that's pretty much a no-brainer. Once it breaks the low here, you're expecting the fib levels down here to be profit target. I probably would have got out somewhere right here at 107.45. Pound yen, weekly trend is nicely up, the monthly trend's up. So once it goes sideways here and breaks out of the high here, I might have went long here. I would have got stopped out with a loss, and I might have flipped here if the weekly trend was down. When it comes down and comes back up, usually it tests that level. If it goes down again, it's pretty safe short, even if the weekly trend's up. I don't really see that much momentum, and I wouldn't really want to buy right here because the fib level's right up here, and there's also a weekly pivot. You have the previous day's high. It is about 15 pips away. It just barely meets the risk parameters, risk reward. I'm not going to risk 10 to 15 pips to only make 15 pips. When this thing came down later in the day without that much weakness and hit the 20-day moving average here and started to go back up, you might have went long because it's already been trending up. Usually trends try to continue one more time. I might have taken that trade, and when it went up here, again, there's no momentum, so you want to get out of that trade. You don't want to do counter trend trades up here because the longer term trends are up. Australian dollar, the weekly trend's down, the monthly trend's up. It's above the hourly. It's pretty choppy here, so you might have bought this breakout right here. It barely went up 10 pips. You would have probably lost 7 pips on that trade. And it came back to the hourly and couldn't break it. Again, the weekly trend is down, so that usually minimizes your odds of making money on the long side. When you trade in the weekly trend, you tend to make more money when you sell if the weekly trend's down. When this went up and kind of went sideways here with a lower high, it's kind of a 1, 2, 3 reversal. It obviously wasn't going up and spent a lot of time going sideways. So you might have given this a short right here, or especially when the low of the day got broken, that led to a nice profit. All the time frame trends are up. The narrow range pattern right here, you might have bought this breakout down to the hourly. Remember, with the narrow range patterns, you only want to buy when it's above the hourly and not sell, because if you sold here, it went down only less than 10 pips and went sideways. Hourly moving average is a major support area. Because it just broke the narrow range pattern, it's less of a higher probability buy here at this. I would have really waited for it to prove to me it's not going underneath hourly, and then broke out right here. And it really didn't go up that much. Your next profit target's only 10 pips away, and that's one of the reasons why it's best to avoid trades that are stuck in major, support resistance consolidation areas like this. And because the longer term trend was up, I don't think I would have normally sold here. Usually when price breaks underneath the low of the day, if it's in such a tight range like this, it's a pretty safe trade right here going short. But considering the longer term trends up, you're not likely to make that much money. Usually the lower trading zones or the fib levels off the first swing, great place to get out. So you're risking maybe 10 pips to make 20 pips max in most cases. And usually I pass on those trades. Dollar yen, I typically avoid this currency, but you can see a perfect example of a narrow range breakout following the rules. Daily, weekly, monthly trends up, the price is above the hourly moving average, and it breaks out above the narrow range pattern and the previous day's high at the same time. Now the downside of this is you have major resistance right here, which is just above it, but this has been going sideways for hours and hours. So if it's in the direction of the weekly, monthly trend, you got to take those trades. This one only went up about 20 pips, and notice it went up with almost no weakness. Because the longer term trend is up, I'm not looking for sells up here, and so I would have missed this major drop. But once you have this kind of intensity of the drop, usually you can sell the first pullback, and you might have made 15-20 pips on that trade. Again, you're not going to make a lot of pips usually when you're fighting the weekly, monthly trend. So if you can catch 15-20 pips and the market stalls, get out and be happy. Here's a perfect example of trading in the direction of the longer term trend. The daily, weekly, monthly trend's up. You had a narrow range breakout last night. It barely went up 10 pips. You probably would have lost 5 or 6 pips on that trade. Pulled back to the hourly and couldn't break it, so I might have went long right here, which didn't work either. Right? Went up a few pips. My initial stop would have been right underneath the lows right here. And once it moves up 5 or 6 pips, I usually cut my stop in half. So I would have got stopped out right here. And then, if you're an aggressive trader, you might go long right here. I usually kind of wait for this high of the previous breakouts high to get broken. So I would have went long right here up to 70, and the trend, took off. Usually you can expect a two-wave move when you're trading in the direction of the longer term trend. So I'm looking to get out here or here. Now, if the market stalled here, I would have got out of half or sometimes all, depending on the day. But if it shoots through there, you wait for the next one. If it shoots through there, you wait for the next resistance area above it, and it goes sideways. I would have been out of the whole thing right here. Because the longer term trend's up, there's no way in the world I would have ever considered selling up here. Obviously, it fell 50 or 60 pips. We do have incredible momentum on the way down. If the weekly and monthly trend were down, you would have looked to sell that next move up. Because the longer term trend's up, I usually wait for it to break down underneath the swing low and underneath the previous day's high. Prove to me that it's not going to try to go up again. This high is far less than the high before, and if you draw your fibs on there, it's probably the 62% retracement of this last move up. Look, to the pip, 62%. So anytime currencies don't break above the 62, that's usually the end of the trend. And on a tick chart, you might have got in here for a quick little 20-30 pip scalp. This trading zone here, anytime the market shoots up, our lower estimated trading zone levels shoot up with it, and this makes a great place to get out of your trade.